Tesla stock today is down about 1%, and we have a lot of big news to go over, specifically news coming from Elon today. Elon Musk has confirmed that after 3.5 years, Tesla will finally be getting rid of the FSD steering wheel nag with FSD supervised version 12.4. It's expected to launch in 1 to 2 weeks. Xiaomi's co-founder tested Tesla's FSD 2 weeks ago, and now he bought a new Model Y to continue testing it. He says, quote, "There is no need for high precision maps and no LiDAR. This is completely based on pure visual modeling. FSD feels like a human driver." Elon Musk liked this post from AJ on X, where he writes, "I think Elon is pivoting Tesla from selling cars to selling rides, and the resulting value creation will be unlike anything the world has ever seen before." Given Elon Musk pretty much has a gag order in effect in talking about Tesla, he's really not allowed to say much on social media. That's about as close as you get to any confirmation from Musk. Is Elon Musk just liking tweets that other people are writing? That's basically confirmation of what Elon Musk is trying to do here. And it seems like someone is starting to pay attention to what Tesla is doing. At the end of the day yesterday, there was $210 million paid in premiums at the July 21st, 2024 276 put. This trade is basically saying if Tesla stock goes above $276 in June, you collect $100 premium without needing to buy the stock at this price. Sawyer Merritt writes on X, "We're having a massive moment with Tesla's FSD progress right now, yet so few people have any idea that it's even happening." He says FSD 12 was a huge step change forward. 1.8 million Teslas got a 30-day FSD trial, and Tesla's fleet is now doing 1 billion FSD miles every 2 to 3 months versus 1 billion every about 3 years prior. FSD supervised V12.4 will get rid of the steering wheel nag coming in about 1 to 2 weeks. Tesla's finally no longer compute constrained, allowing them to improve FSD much quicker. The company's compute capacity will increase at least 6x this year. So even though they're not constrained on compute, it's going to 6x this year. That's got to speed some things up. This was big news a couple of weeks ago and caused Tesla stock to rally big time. It was preliminary approval to launch FSD supervised in China, but we did get news yesterday that potentially ROBOTAXIs may start to be tested on Chinese roads. And that was huge news that got really just shoved under the rug, if you will, based on that Fudster article from Reuters. Sawyer Merritt does go on to say that Swedish Transport Administration advisor praises Tesla's FSD, calling it smoothness and natural driving after being given a test ride on German roads 2 weeks ago. Sawyer Merritt says, "Buckle up. These are exciting times." It's not just FSD that is firing on all cylinders. Check this news out just today. Tesla has secured a new $448 million Megapack contract to quadruple the size of the Stanwell battery in Queensland, Australia, making it the biggest in the state. The total project cost for this Tesla battery will now be $747 million. I don't think energy is appreciated enough in Tesla's business. If Tesla were to spin off the energy business, it would be valued higher than it is today, which is fascinating. But I think Tesla's energy business is a force to be reckoned with, and over time, it's going to grow into a behemoth of a company. So if all else fails, you still have the energy business. They said Tesla's energy storage business has never been better. Despite only launching its energy storage arm in 2015, as of 2023, the company had an output of 14.7 gigawatt hours in battery energy storage systems. The Tesla Megapack X account wrote this post about Gridstore LLC's site in Goleta, California, that is now Santa Barbara County's largest power resource, surpassing the local peaker plant. This battery storage system bolsters grid reliability for the region and supports California's transition to renewables. Adam Jonas just released a new note on Tesla. He says, should Tesla's ongoing restructuring actions be a lesson for other auto companies? Probably yes. He says, quote, as Tesla continues to shift incremental capex away from the automotive side of the house and towards the data/computing/learning/robotics side of the house, we see a real chance that the broader industry, legacy players and EV startups alike, will follow. So yet again, it appears that Tesla is just ahead of the ball and they are doing things first. And the other competition, if you will, if you can even call them competition, are going to follow suit later on. Thus, I would imply Tesla's going to have a pretty big head start in whatever this transition ends up being. Whether it is just to make Tesla a leaner machine, whether it is for truly full self-driving and the eventual ROBOTAXI, or if it's all about AI. Whatever it is, probably all of those things are the reasons why Tesla's doing what they're doing, let's be honest. Tesla's going to have a massive head start on everyone else. Elon writes on X that Tesla must focus on FSD for the other 99% of the fleet, that the Cybertruck FSD is still a few months away. Ford backs down from going all electric in Europe in 2030. Ford said, quote, if we see strong demand, for instance, for plug-in hybrid vehicles, we will offer them. Volvo will introduce mega castings into the production of its next-generation electric cars due in 2026. Lucid CEO Peter Rawlinson says the company has had a few breakthroughs on their R&D team recently. He says he's anticipating a car that gets 5 miles of range for every kilowatt hour of battery energy. That's comparable to about 4 miles currently per kilowatt hour that you'll get in like a Model 3. So it's slightly more range. Hong Kong reported 523 Tesla sales and 8.1% market share for April. We are getting a report from Tesla Chan about the current state of self-driving on roads in China. Hangzhou on May 1st created the implementation of intelligent connected vehicle testing and application promotion of regulations. First city to clarify specific procedures for autonomous vehicle operation by law. Self-driving in Beijing and Shanghai is still only available in outer suburbs. The allowance for autonomous driving in Guangzhou's urban areas is around 5%, and Tesla seeks an application to test robotaxis in Shanghai. Elon Musk writes on X, FSD is a very hard problem. This follows a post by Tesla Chan that Hyundai Motors joint venture self-driving company Motional has laid off its employees and postponed plans to commercialize its technology. On May 6th, Zhang Ying, director of the Shanghai Economic Information Technology Commission, noted that Shanghai will accelerate the construction of world-class self-driving pilots to facilitate early road adoption of self-driving vehicles. And Tesla China is now recruiting technical talent, including self-driving software test engineers, from its Shanghai data center. That is yet again some great news that really got shoved under the rug yesterday. Global inventory numbers for the Tesla lineup are falling today. The Model Y most notably going from about 7,200 down to about 6,700. That's fantastic. You want to see Model Y inventory numbers start to fall. The Model 3 is staying roughly the same at about 2,500 or so. The Model X just fell to about 2,200, and the Model S just fell about 100 as well. Tesla continues to advertise about 4,000 different ads with Google. MT Newswires is reporting that Tesla accelerates job cuts in China amid slowing sales. It says Tesla's ramping up job cuts in China after vehicle shipments in the country fell by 18% in April. Bloomberg News reported Thursday, citing sources familiar with the matter. Additional layoffs started earlier this week, the report added, citing the sources. Job cuts in April more directly affected sales representatives, the report said, citing the people. Most of the impacted staffers will get a payout equal to their 1 month's salary for every year they worked, plus an additional 3 months' salary, Bloomberg said. Option activity today in Tesla stock by big money is still quite negative, but the dollar amount has been very low. Anytime you're getting a negative option activity in a day for Tesla, it's not like there's a lot of trades coming through. So today you have 56 different trades totaling about $15 million with a positive order value of 29%. Tesla still sitting at multi-year highs for short interest at 3.85%. $18.63 billion currently in short positions, with 106.61 million shares that are currently sold short. And I would argue that's probably one of the reasons why you're getting all of this bad news out of Tesla recently, or being promoted as bad news out of Tesla, because short sellers, they're in a really bad position. If Tesla does continue to do well from here, they're going to start losing billions and billions and billions of dollars. And you have to think there's some financial interest at play, especially with Reuters' report yesterday about the DOJ investigation into Tesla. I mean, that's been going on since 2022. It was just, chosen to be released yesterday, on the same day in which Tesla is asking essentially for approval to start testing ROBOTAXIs, not FSD. ROBOTAXIs on Chinese streets. That was huge news that, unfortunately, unless you're an investor and watching this video or these videos that are put out here on YouTube, you didn't even know about it. It didn't even affect Tesla stock. Nonetheless, here on the day today, Google Trends data is indicating an uptick in search trend activity for the Cybertruck, going from 57 to 59, whereas the Model Y is going from 27 to 26, the Model 3 is going from 24 to 23, and the Model S is staying at about 11. The Model X is sitting right at about 9. Google Trends data for full self-driving is hitting a new low down to 24, which is still a lot higher than where you were previously, which would suggest the free trial that is now over that Tesla was offering for full self-driving did likely boost the take rates and probably is going to continue to boost the take rate. CNN's Fear and Greed Index today is going up quite a bit to 43. Yesterday, you were at 39, so that's a great sign. If we look at the breakdown of the 7 different indicators that make up the Fear and Greed indicator, market momentum is greedy. That is because you are above your 125-day moving average. Stock price strength is in extreme fear territory, meaning that, when stocks are going up, they're not going up by that much. Stock price breadth is in fearful territory. This was in extreme fear, but you are starting to see better participation in different sectors of our market, so that's getting a little bit better. Put and call options are back in fear territory. They were just at a neutral level, and now you're back into fear territory. Market volatility is neutral today, and safe haven demand is now in fearful territory. And this is the difference in 20-day stock and bond return. So bonds are outperforming stocks right now by almost 2% over the last 20 days. And junk bond demand is in greed territory. 10-year treasury yields are falling about 2.5 basis points, almost 3 basis points today. And that is giving a boost to most notably your small cap stocks. If you take a look at your major indexes today, while they are all green, you are seeing the Russell that is up 0.5%. The Dow is up quite a bit as well, up 0.65%. But besides the Dow, the Russell is outperforming a lot. Now, some of this could be weekly jobless claims. They just jumped to 231,000, the highest since last August. As I already mentioned, Tesla stock is down about 1% today, but you are holding support at your 50-day moving average. That is exactly what you want to see, right? You want to hold support at your major moving averages, and that's what's happening around the 50-day moving average. If we do get some downside coming in the market in the next couple of days or weeks, Then you want to look towards your 20-day moving average at about $168 per share or so. You should find support there. If not, and if things get worse, then you're going to fall to about that 160 level. I think there's a good chance that we do kind of bottom here around this 50-day moving average. We have started to fall quite a bit from the rally that we've seen post Tesla's last earnings. You've fallen from on the high side of $199 down to $173. You've definitely seen your consolidation phase, and could be due for another kind of bounce back here, but we'll have to wait and see. We really want to get above about $180 per share to get back into a continued breakout to the upside. Tesla's MACD is still positive. Signal line is at 0.93. MACD line is at 2.22, but you are starting to curl down lower, and if you do fall under that blue signal line, that's a sign of further downside to come. Tesla's RSI is exactly neutral today at 50.2, so not too much to pull out of that. Nonetheless, that is everything you need to know about Tesla stock, all of your breaking news, and the general gist of what's going on in the markets today. Hit the like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. If you guys indeed want to come trade with us live in real time, check out that link down below in the description of this video as well. You guys have a fantastic rest of your day, and I will see you in the next one.